Yeah, I think we're good to go. Thanks, everybody. Welcome to this live webinar session presented by BTG Group. My name is Kerlsey Vinay. I'm a director of BTG Management Services in Mauritius, and I'm heading up the business development for South Africa and for Africa. So I'll be the host of the seminar this morning. The topic is the loop structures and particularly the relaxation of the regulations by the South African Reserve Bank. And then we'll present Mauritius as a favorable jurisdiction for South African tax residents. So just a quick introduction to BTG as a group. So BTG is an international financial services group. It was founded in Geneva in 2003. We have 8 offices across the globe internationally. We're dedicated to protecting and enhancing our clients' wealth in a stable and discreet environment. We have 3 major divisions across the world. The first, BTG Trust and Corporate Services. We offer and accommodate formations and the management of offshore companies and trusts. And we offer and accommodate these structures both out of Switzerland. We have a Geneva office and also out of Mauritius. We have a wealth advisory company in the group, wealth management and advisory company. We have offices in Durban, Johannesburg, and Cape Town. And this company provides independent and expert advice on local and offshore investments, funds, portfolios, and structures. We also have Martello, which is an asset management company. It's Jersey-based and operates on a discretionary asset manager basis. Specializes in focused global equity and multi-asset portfolios. It is regulated as both an investment and fund services business by the Jersey Financial Services Commission. And we've just recently been authorized as a financial services provider in South Africa by the FSCA. So that is just the BTG Group in a nutshell. With me, co-presenters are, we have Johann and Ernest, and I'd just like to invite them to introduce themselves. So Ernest, if you can take the floor.
Hi there, everyone, and thank you, Kerlsey, for the opportunity. I'm Ernest Marais. For those of you who don't know me, I'm a director in the tax department of Andersen, formerly known as Tabax, or still, I think a lot of you will still, fondly refer to as Tabax, but we're trying to get that name changed over now. We are in South Africa, we're a full services tax and legal advisory firm. We do everything from big corporate commercial team, everything from mergers, acquisitions. We advise on private wealth. We've got a big litigation teams if things do go wrong, which we obviously certainly hope it doesn't. And then we've got a big labor law and environmental health and safety team as well. Obviously, my personal practice, like I said, is focused on corporate commercial law and especially tax, which is quite nice. Since we've joined Andersen, we've now got access to tax advisors in over 132 countries worldwide. So we're trying to, we're firmly working towards becoming geographically the largest tax and legal firm in the world. We see that there's our entire plan is focused on saying that we believe that tax is more closely aligned with the law than it is with accounting services, and that is why we've moved away from the model from saying this, and we think that we've got in a Pricewaterhouse, KPMG, those type of guys who does your accounting, does your auditing, and does your tax. We think that it's difficult to give tax advice and to then do an audit on your own or your colleagues' advice, where we think law firms, given that we're dealing with actual rules and regulations of the law, we think that it's best positioned to fall within the legal side of things. Having said that, obviously we do not do your tax compliance, we don't do your filing, we don't do those type of things. There's other people who can go and who understands the SARS e-filing system much better than I do and will ever do. So yeah, that's myself and Andersen in a nutshell. Johann, over to you.
Thank you, Ernest. Yes, good morning, everybody. My name is Johann Strauss. I work with Kerlsey for the BTG Group. I am part of the business development team for South Africa. Previously, I spent 3 years in Mauritius as the finance and operations director for BTG Mauritius. So I've got a very good understanding of the Mauritian side of the businesses and the structures that we set up. And for the last 2 years have been back in South Africa doing business development. And yeah, as Kerlsey mentioned, our focus is mainly to structure in vehicles through Mauritius or Switzerland, is where the 2 areas or 2 jurisdictions that we look after, and finding solutions for our clients from South Africa, because our client base are probably 85% South African. So we do understand the challenges and the ways to structure it from South Africa going to Mauritius. I'm a chartered accountant for my sins, what I studied, but I haven't been practicing that too much in the last couple of years, but yeah. Thank you.
Good, thanks, Johann. Okay, so I think let's kick off and let's look at and discuss the loop structures. So Ernest, I'll start, just direct a few questions to yourself. And just regarding the invitees, we can keep this as an interactive session. So if you have any questions, please feel free to raise your hand and just ask the panelists questions direct. So Ernest, if you can just maybe, for the benefit of everyone, just explain exactly what a loop structure is.
Thanks, Kerlsey. Yeah, so a loop structure arises when a South African resident, albeit a company or an individual, acquires an interest in a foreign target. Foreign target can be in the form of a trust, having a beneficial interest in a trust, or it can be by virtue of holding shares in a company or an interest in a private equity fund, whatever form may be. And that foreign target then holds any form of assets back into South Africa. So obviously, as you can, as I always try to draw it out on a picture, saying you've got the border, you've got the South African, it holds shares in a foreign target, and that foreign target holds shares back into any form of assets back into South Africa. So how it used to work is, initially there was a absolute outright ban on loop structures, except for a few exceptions. Those exceptions were mostly related to if you hold shares in a big fund or in any form of a listed company, and that listed company or fund then holds assets back into South Africa. A typical example would have been that you hold shares in an offshore fund portfolio, and that private equity fund then decides to acquire assets in South Africa. The Reserve Bank used to say, listen, we're okay with that. You've got absolutely no control over how that private equity fund invests. However, it was completely disallowed for you to take up shares or take up an interest in a trust or a private company, and that private company then coming in and holding assets in South Africa. In 2018 and 2009, I think late 2018 October, the Reserve Bank started to relax these loop structures, and they said that you were allowed up until that point to hold up to 40% of the shares or interest in a foreign target, and that foreign target is then allowed to hold any South African assets. So they refer to that as a permissible loop, provided that your interest in that foreign target is less than 40%. And finally, at the start of this year, I think it was the 1st or the 4th of January this year, the Reserve Bank finally published a circular saying we've now got loop structures are now allowed. You can now hold up to, there's no restriction on the amount of shares or the interest that you can hold in foreign targets, and therefore you can now, and so you can hold up to 100% of the shares in a foreign company, and that foreign company can hold assets in South Africa. And similarly, it says you can be a beneficiary of a trust which holds assets in of an offshore trust which holds assets in South Africa. So it's actually, they've relaxed the restrictions quite nicely, and I think it's going to be, I think it's very good. It's a welcome change.
So hence, before the loops were prohibited because to avoid funds flowing offshore probably in the form of interest, dividends, royalties, that type of thing. So, I mean, what was the reasoning now? How do we understand why the Reserve Bank kind of relaxed these loop structures now?
Because I think there are various reasons, and I think the public statement was we want to encourage foreign investment. Now, obviously it's a bit of a, how do you, it's actually, you're just allowing South Africans to take money out of the country. How does that encourage foreign investment? But I actually think it's very very smart about how they went about it. I think what they're trying to do is two things. They realize that South Africans are in a position where everybody's feeling the economic and the political pressure that's surrounding the country, and they wanted to create an avenue for South Africans to take their money out of the country and be able to reinvest that money in South Africa. I think most people, high net worth individuals, they know the South African landscape, and they know where how they want to invest in the country. However, they also want that safety and security of holding assets offshore. So I think this, obviously, the relaxation of the loop structures allows them to take money out of the country and then bring it back into the country, and it also allows them to any foreign capital that they've already got. Because now at the moment, up until the start of this year, if you took out 10 million rand out of the country, you couldn't use that 10 million rand to reacquire South African assets. You had to bring it back into the country in order to acquire those assets. So I think indirectly it will encourage foreign investment. And I think what was quite smart about SARB is this will provide them with a lot of visibility as to the flow of funds in and out of the country. Back in the day, they've had a there's, let me think about how to phrase this. I think a lot of people took money out of the country, and they found some obscure, potentially not legal method of creating a loop structure by way of, be it nominee shareholders or some form of a strange non-visible arrangement. And I think SARB started to pick up on that and said, listen, if we want to, let's allow people to do it, but let's allow them to follow the proper channels, and we've got visibility of what they're doing. This will allow them to suddenly tax their foreign assets. It allows them to see exactly what flows in and what flows out of the country, and it allows people to come clean as anything that may have been done in the past. So I think from their point of view, and it speaks typically to, I know there's this old theory of Laffer with the Laffer curve, and said, it was focused on taxation, but it said, the basic principle was you can increase tax rates up to a certain point, and up to a certain point, it will lead to an increase in revenue. However, at some optimal point, and a further increase in tax rates may lead to a decrease in revenue, because people will start making alternative plans. They'll stop investing, or they'll find alternative ways to invest their money. They'll find some form of way to circumvent paying tax. I think this is a similar issue where they've made the regulation so onerous that people started finding alternative methods to do things, or and South Africa weren't seeing any of those funds flowing back. So yeah, I think visibility for the Reserve Bank and for SARS, I think it's a great way to get full visibility on what's flowing out of the country and what's coming back in.
Okay, thanks, Ernst. That's very interesting. So obviously it presents a lot of opportunity for SA tax residents now. But I think, are there any other new tax legislation that's been introduced that could maybe create pitfalls?
So yes, there's obviously a lot of opportunities. Let's start with the opportunities. I mean, South Africans, like I said, any foreign capital that they've got, they can bring back into they can reinvest back into the country. They can acquire if they've got property in South Africa, that can be held suddenly through a non-resident company, non-resident trust. We don't know exactly how the expropriation of property, how that thing's going to play out. Is it going to apply both to South Africa, to locals and to foreigners? The same. There's international. So there's a lot of things that suddenly change. Furthermore, a lot of people used to operate their business through Marais structures. So if you'd have your South African operations will be held by shareholder A, B, C, and D, and your African operations will be held via Mauritian entity through shareholders A, B, C, and D. But obviously there's no loop created, because obviously the Mauritian entity holds African assets. It doesn't hold any South African assets. Those assets are all held by a South African company. The issue with this structure was, obviously, if you want to sell your company, your foreign investors suddenly needs to buy 2 companies. It needs to buy South African companies to get access to the South African market, and it needs to buy your Mauritian company. Now suddenly you're in a position where you can have one holding company positioned in Mauritius, Switzerland, wherever, and that holding entity can hold both your South African and your international operations. It's just a lot cleaner than it used to be. As for the tax implications, I mean, I think we're opening up Pandora's box here, so I don't really want to go into too much detail on exactly the tax requirements. But with the visibility, what came about, like I said, I've spoken to it earlier. So Saab suddenly they've now got full visibility of Saab money going in and money out of the country, and you've also got the common reporting standard, which now says if you're holding any foreign assets, that's going to be reported to the tax authority of the jurisdiction where you hold those assets, and that tax authority is going to speak to SARS and just say, listen, so you've got the common reporting standards. So suddenly SARB and everyone's got full visibility. So you obviously need to make sure that from a tax point of view, that any structure that you do is set up correctly. However, I've always said that tax planning is still allowed. You're allowed to set up your affairs in a manner that is as tax efficient as possible, and it goes back to that old, I can't remember the case now. It's one of the most famous tax law case, but where the judge basically said, SARS can be jealous about the ingenious of your structure, but it can't. But if it's within the law, it's within the law. So I think there are a lot of things. However, what SARS have done is, and that is first thing. A lot of people said, oh, there's a nice gap in the market, because as you may know, if you hold more than 10% of foreign shares or more than 10% of equity shares in a foreign company, and you bring those, and any dividends paid in respect of those, any foreign dividends paid in respect of those shares, or any capital gains that arise in respect of those shares, are completely exempt from tax in South Africa. And the reason why SARS, this came from a long time ago, the reason why SARS made this exemption is saying, listen, we want you to bring your foreign capital and foreign dividends back into the country, so we're going to exempt you from tax. So when the loop structures arise, a lot of people went, oh, this is great. What I'm going to do is I'm going to set up a Mauritian entity, and I'm going to be the sole shareholder there, and I'm going to just run my entire business through Mauritius, and all the dividends that, if I pull dividends from South African entities, it's taxed at 20%. If you're an individual, if you're pulling it through Mauritius and you hold more than 10%, now suddenly that's entirely exempt from tax. SARS obviously looked at this and said, listen, guys, we're not that stupid. So they went in to close that loophole and said, listen, if there's a controlled foreign company offshore, those dividends, with that foreign exemption is now restricted, and the restriction, there's an entire methodology how they put out as to in what sense it will be restricted. But I think it will basically come down to, you would pay dividends tax as if it were held as if you held those shares directly into a South African company. So there's actually no they've actually closed that loophole there for individuals and companies, on the exemption, provided that you're dealing with a controlled foreign company.
Okay, thank you. Very interesting.
Yeah, if I can just add there, I think, like you're saying, Ernest, yes, there is definitely a lot of opportunities, but where in the past structuring has a lot been on tax and tax implications and savings, I think the landscape is changing quite a bit, and it becomes more about your succession planning, your structuring, your security that you're basically setting up. So I think that over time, that's going to definitely change a lot, especially when you're looking, like Ernest is saying, is SARS is looking at all the structures and they're saying, okay, listen, that's great, but we are going to make the changes so that the tax benefit is not going to be like a loophole where you can get money out and you save a lot of tax. I think it's more keeping it offshore in a secure, safe jurisdiction, keeping it in dollars rather than the rand, and that making sure that you've got that hedge against the devaluation of the rand. So I think over time that's going to be one of the bigger reasons for people taking it offshore. And I think also one of the benefits I see from this type of change is the funding mechanism into your offshore jurisdiction or your offshore structure. Because previously, if you had an offshore trust and you wanted to take capital out and put it in the trust, you had to do it with your after-tax money, and it's a loan that you provide to the trust. Whereas this way, if you own that, if your foreign trust owns the shares in the South African company or something like that, and there is a dividend declaration, it goes through without impacting you. So it's not increasing your personal estate. It's kind of a funding mechanism to get funds offshore as well.
Thanks, Johann.
Thanks, Johann. Sorry, because I see there's a couple of questions there. Do you want me to address the questions, or do you want to get back to them?
No, I think you can. Yeah, if you can see the question, you can address them. Yeah.
Perfect. Sorry, let me just quickly read that. I've got here from, I think, Willem van der Berg saying, I met with the tax lawyers regarding the loop structures 2 weeks ago. The lawyer mentioned that they met with an authorized dealer, and she could not tell me whether the share certificate of the offshore co holding into SA will be endorsed non-resident owned. Any further developments or clarity on this? Willem, I haven't received any formal clarity on that from the Reserve Bank. There's no clear guidelines that has been published on this. However, I think it's, for me, it's still the same. It's still the same concept. They still want to regulate the flows in and out of the country. So I'd expect that the endorsement will remain. There's nothing that's been amended to say that you no longer need to endorse the shares as non-resident. So my understanding is that yes, this will absolutely remain, and the requirements to and we can speak to that a bit later, but the requirements in order to get permission. So like I said, I think we need to clarify, be very clear on that. Loop structures it's fully permissible, but you still need to go and get permission from your authorized dealer, being your local banker, in order to enter into loop structure. So and there's nothing that's been changed in terms of the endorsement. So yes, I would expect that you'll still need the endorsement, and you'll still need to know that money is flowing out of the country to a non-resident. I hope that answers your question. Second question I've got here is from Les Davis. If one has an offshore trust and a local portfolio, can one transfer the local portfolio to the offshore trust? Yes, absolutely. I think that is to a large extent, that's part of the purpose of the relaxation of the loop structures. You can definitely move any form of South African assets, and you can transfer that to your offshore trust. I need to qualify that transfer will be deemed to be a disposal for capital gains tax purposes, because you and the trust are different taxpayers. So you will have to pay capital gains tax on the transfer of your local portfolio to the trust, and then your trust will need to actually acquire that local portfolio from you. So there will need to be an exchange of funds or a loan account created, or whatever it may be. Yeah. Martins Boysen, if you're operating totally offshore and a company is established in Mauritius, in terms of taxation, how does one avoid taxation in both a foreign country as well as local? Can you give more info on a foreign business establishment? I'm assuming FBE. Martins, yeah, so let me just quickly in terms of how does one avoid it as well. So Martins, yeah, I think you've always got that, so there's two things. You only local taxes. So we need to it's quite a loaded question. We need to break this question down, because obviously you've got the taxation of the company in itself, and then you've got the taxation of the shareholders of the company. Those are two different taxpayers, obviously, and completely independent from each other. The company in itself, if it's a controlled foreign company, then the income of that company will be attributed to its shareholders, and that shareholders will also be taxed. And that's a South African rule of taxation. However, any tax that you have paid in terms of that foreign company, you will get a foreign tax credit on that. There are furthermore, it's worth if you pay in your local, if you pay in the foreign territory, if you pay up to 67.5% of the tax that you would have paid in South Africa in any event, then you don't even need to attribute the income to the shareholders, because SARS are saying that they refer to it as the high tax exemption, and they're saying that, you know, we're not going to be bothered to get that difference of, you know, because the only benefit for SARS is then the difference between what you would have paid in South Africa being the 28% and the 9 or 10%. That's, listen, we're not even bothered to go after you for that 10%. So provided that you fall within a jurisdiction, we've got a 67.5%, you would have paid 67.5% of the tax that you would have paid in South Africa. That company, that company will be exempt from you won't need to attribute the net income of that company to the shareholders. If you pay less, let's say if you pay 20% of the tax that you would have paid in South Africa, or 10%, you will get a tax credit for that 10% that you would have paid. So your net tax effect would have been exactly the same as it was in South Africa. The other exemption, and that I think that's what you're speaking to at the end of your questions, is on a foreign business establishment. Now, what SARS have also said is, listen, and obviously the idea of a controlled foreign company was to primarily tax passive income that arises offshore back to the South African shareholder. A foreign business establishment, and they said, listen, but if you've got a proper foreign business establishment offshore, you'll be exempt from that tax. Now, a foreign business establishment is usually if you've got a proper office set up with the necessary infrastructure to run an office of that size, with the necessary employees, with the necessary factories, whatever it may be. So a lot of people mistake saying, listen, by virtue of having your place of effective management in Mauritius, you're automatically, and you've got a registered office there, and you've got, you know, Johann and BTG providing your services there. That, in my opinion, is not sufficient to create a foreign business establishment. To create a foreign business establishment, you'll need to have you'll basically need to have what you're running in South Africa. That same office your office in Mauritius will need to look, or in Switzerland, or wherever you're sitting, will need to look exactly the same. You know, so that's, yeah. But also, if you meet those requirements, if you've got a proper office, and you've got, you know, for the type of business that you're running, then obviously, again, the controlled foreign company rules doesn't apply, and yeah, that income is not attributed to the shareholders.
Yeah, if I can also just add there, Martin. So obviously, the question, the way I understand it, is, let's say you set up a Mauritius company that trades. Now you want to make sure that that company is not taxed in Mauritius and then taxed in South Africa. And as Ernest is saying, is for a foreign business establishment, you have to have what they call suitably qualified employees that run the business there. You've got to have the right equipment. You've got to have an office. So those are all things that SARS will look at from South Africa to say, yes, is that company effectively run and managed from South Africa, or is it run and managed from Mauritius? I think gone are the days where sitting in an offshore jurisdiction, you can access the lower tax rates. I think it becomes more in, can you justify that you should be taxed at the lower rate? And then you've got the two differences of opinion, or the two requirements differences, because in Mauritius, the requirement to have a company is to have 2 resident local directors, to have a registered office and a company secretary. And then if it's a trading company, you have to employ at least one person for up to $100 million in turnover. So that's a very lean requirement. So the risk always comes back to South Africa, and how would SARS see that company. So that's the thing that we always talk to clients about, is you have to build your substance in Mauritius over time. You have to set up that office. You have to get your personnel there. And that will allow you to not have the risk from SARS. So yeah, those are definitely things to consider when you are looking at setting up an offshore company.
Yeah.
Thanks, Johann and Ernest. So Ernest, with these loop structures, now that they're available to us, what is the process and the requirements to put one in place now?
So there is, so there's a couple of, obviously, like I said, Saab and SARS are all about visibility now. That's what they're trying to gather information. And, I think it's actually, as mentioned before, I think it's actually quite smart of them. First thing that you'll need to show them is your source of funds offshore. How did you get those funds offshore? When did you move it out of the country, or did you? If you got it from foreign employment, when were you employed? What is your salary? And to make sure that those funds were legitimately moved offshore. So they'll want, and I think they're also looking at this from any money leaving the country that's about to leave the country. They're also looking at from a money laundering point of view to make sure that, I think it's quite obvious what's happening in South Africa at the moment, and I think it's quite a useful tool for them to say, listen, you need to provide us with source of funds. We need to make sure that first of all that the funds that's outside of the country are clean, and the funds that's going out of the country is also clean funds. The second thing is they would want full visibility of your structure. If you're doing it, if it's a company, they want an entire organogram. They want the details of all the shareholders, the percentage of the shareholders of where they're holding the shares, and I think they require the domicile of the shareholders as well. If it's a trust, they want a copy of the trust deed. They want to have all the names of the beneficiaries of the trust, and they want to also have the details of the domicile or the tax residence of those beneficiaries. And then lastly, what's quite important is they want to make sure that they want a fair market valuation from an auditor, independent auditor, verifying that the shares that you're acquiring is being acquired at arm's length. Again, you can't, and the reason for that is they want to make sure that those things, we're allowing you all these things, but we're taxing you on it. They don't want you to sell your shares, your current shares in your companies worth 10 million rand, and now you're selling it at 1 rand to a Mauritian entity. And the moment that the Mauritian entity holds those shares, the taxing rights on those shares move from South Africa to Mauritius. So they say, listen, fair enough, you can move it out. However, just sell it at fair market value. So yeah, and I think that's the key requirements. Important to note that a South African trust is not allowed to enter into a loop structure. So you can't use your local trust and acquire shares in an offshore company. You can, however, use your local trust with an underlying subsidiary, and that company can then acquire shares in a foreign company.
Thanks, Ernest. Yeah, so understanding that, I believe as part of proving the fair market value, you have to submit confirmation by a registered auditor that it is an arm's length transaction, a fair market value. So we probably have to get auditors involved to do a formal valuation on that company.
Yeah.
And I think for the benefit of our listeners, obviously there's some tax planning to do, because when you move that value offshore, you've got to consider the capital gains tax implications. So there will be a capital gains tax implications, which SARS will look to collect as well. So it's part of the planning. So it's really, those valuations, if you look at it, maybe some companies, if they've struggled during the COVID period, it may result in a much lower value of their business at this point in time. So timing could be critical. And if you value a business now that has been struggling for the last 18 months, it's probably worthwhile looking at moving that structure offshore pretty quickly. So I think timing would be critical there.
Just a quick question. Sorry, Ernest. Just to make sure, just to confirm, you don't need to get approval for a loop structure, or do you? Or is it just that you need to notify your authorized dealer that you have entered into a loop structure, or is it actual like a formal application process?
No, you need formal approval. So you'll need, you don't need to go to the South African Reserve Bank. Your local banker can approve it. So, authorized dealers, your Investix, your First National Bank. Sorry, I keep interplaying between authorized dealers and the local bankers, because I've once wrote an opinion to a client and I kept using the word authorized dealer. And the guy phoned me and he said, listen, I'm very upset with you because you clearly copied and pasted, the entire opinion from somewhere else. And I was like, what do you mean? He said, well, you keep referring to car dealerships. And I said, no, I'm not, I'm not referring to car dealerships. That's what our bankers or our gatekeepers are referred to as authorized dealers. Yes, you need to go to them, and they obviously, if it's not at fair market value, if those shares are not being transferred at fair market value, if those funds are not, the source of those funds are not clean, they're not going to approve. They're not going to approve. And I think it speaks back to Willem's points earlier. I think at the end of the day, you will need to get those shares in. You will need to get those shares endorsed as non-resident, because that's essentially what the authorized dealer of the bank is going to do. It's going to say, you know, and they're not going to give you that endorsement if you haven't, because otherwise, again, it defeats the entire purpose of the visibility that we've spoken to.
Okay. All right. No, great.
So I see that we've got a few more questions. Because do you mind if I address them?
Absolutely. Go.
I see it from Willem. Ernie, for the Mauritius guys, I'm dealing with a couple of Mauritius companies pushing trading companies to Dubai rather because of the substance requirements and blacklisting. Any comments? Willem, my understanding of it is, and I'll give over to Johann now. He may be better positioned than myself to answer it, but my understanding is Mauritius has obviously now moved to they've now moved to this from what's it, the GBC to GBL, GBL to GBC. I can't remember which way around, but anyway, and obviously in the new regime, in order to be seen as a GBC company, you need to have the substance requirements, and if you're considered to be a proper Mauritian tax entity, obviously tax resident, and you can benefit from the double tax agreements between Mauritius and its entire network of tax treaties. However, you've also got the option in Mauritius. Again, Johann, you can come in now, to not apply for the GBC license and be seen as I can't remember what's the name. It's a registered company.
Authorized company.
An authorized company. And an authorized company, and that's where they're saying is we're not going to meet the substance requirements. We're putting a director in Dubai, and we're not regulated. We incorporate in Mauritius, but we're not regulated. You're outside the scope of all the strict regulations, outside the scope of the substance requirements. And in theory, yes, that can work. But my concern with that is you're immediately moving yourself outside of the tax treaty network, and you're immediately moving yourself outside of the international investment, those international investments agreements. So if SARS then do come and tax you aggressively or tax you outside the scope of so you can't rely on the South African Mauritius tax treaty. If SARS then do come in and they say, listen, we're going to tax you as we deem fit, you don't have the option of saying, listen, here's a double tax agreement. I'm relying on clause X, Y, and Z of the double tax agreement. It speaks to place with, I've got my place of effective management. Mauritius, therefore Mauritius has got taxing rights. US SARS don't have taxing rights. Now you're removing that benefit. Now SARS tells you, at SARS tell you, listen, your place of effective management is not in Mauritius, it's in South Africa. Then you need to fight SARS in South Africa within the South African courts, and you can't rely on the Mauritian tax authorities to tell SARS, no, we've got taxing rights over that, or the Dubai tax authorities to tell SARS, we've got taxing rights over it. So I think if you do go down that route, it's definitely an option, it's definitely possible, but I think I think it brings its own risks. And again, you're sitting with a company that's not tax resident anywhere. I'm just thinking bank account opening, those type of things that may prove difficult. Johann, I don't know if you want to speak to authorized companies. I think you're better positioned than me.
Yeah, no. So basically, the question is twofold again. One is the blacklisting of Mauritius. So just to let all the participants know, about 2 years ago, a year and a half ago, Mauritius was blacklisted by the European Union, and they were blacklisted for their third-party payments, so high risk third-party payments. So what they said is, in their processes of receiving funds into Mauritius, there is some processes that are not mitigating potential money laundering and terrorist financing. So for that reason, they blacklisted and said, okay, we have to rectify, or Mauritius has to rectify that. So Mauritius were aware of these items that they weren't doing properly. It has been identified, I think, a year before that by another task force that looked at the specific items, and they did put forward a rectification plan which spanned across, I think, 2 or 3 years. to rectify all those items. So they were based on those comments and what they put in place. They were addressing the concerns, and then all of a sudden, out of the blue, the European Union blacklisted them. So that came as a shock to everybody in the financial center. And since then, they've aggressively worked on the points and have sent the rectification items to the European Union. So once the next round of review comes from the European Union, I'm sure we will be lifted from that ban. But I think it's very important to note Mauritius hasn't been blacklisted as a harmful tax practice jurisdiction. It was blacklisted for those reasons. And the consequences of that is probably a high level of compliance and due diligence that will be performed on payments and new business and everything like that. So that's the one area. The second one is, yes, the substance requirements. I think to me, when I look at it, it's basically risk management that needs to be applied. It's not whether you can go to Dubai or whether you can go to Mauritius. It's how much risk are you willing to take trading through Dubai or Mauritius. Now, Mauritius has stepped up their requirements to say, okay, we need you to provide substance. We need you to build that on the island so that you are accessing those lower tax benefits. If you go to Dubai and you don't do substance requirements, if you don't set up a FBE, if you can't prove to SARS that you are running the office effectively from Mauritius, then you will have a tax risk. So it's not, I don't see it as mutually exclusive. Mauritius has substance requirements and the other ones don't. I think it is, what is the level of risk you're willing to take? So when Ernie mentioned the authorized company, yes, you can set up an authorized company in Mauritius that's not tax resident there. But by virtue of where you're operating that company from, where your effective management and control is happening from, you might have to pay tax there. So you can set up an authorized company in Mauritius that doesn't pay tax in Mauritius, but then if you are running it from South Africa, you are increasing your risk that you can be taxed in South Africa on that company.
Thanks,
Thanks, Johann.
Then I see you've got another question from Louis, who asks, if you have substance in Mauritius, a proper FBE, but the place of effective management is still in South Africa, what is the position? That's a great question. So obviously your place of effective management is obviously speaks to where all the high level decisions are being made. It speaks to basically where your board of directors are controlling the company. That will determine the tax residence of the company, and obviously that's the taxation of the company in itself. The proper foreign business establishment speaks to the taxation of the shareholders on a level above, obviously, which means can income be attributed or not attributed to the shareholders. So obviously, but obviously you've got a place of effective management in South Africa, so the company is a tax resident in South Africa. However, in the same, you've got a proper foreign business establishment in Mauritius, meaning you've got offices, you've got people there. That foreign business establishment will create what they refer to in the double tax agreement as a permanent establishment in Mauritius. A permanent establishment, obviously, and usually what the double tax agreement says is any income that's attributable to that permanent establishment is taxable in that country where that permanent establishment is located. So to the extent that you can attribute income to that FBE in Mauritius, Mauritius has got taxing rights over that income. That will be taxed at 3% or 15%, depending on whether it falls within the exemption. And South Africa won't have taxing rights over that, even though the company is managed from South Africa and tax resident in South Africa. Yeah, I hope that answers your question.
I think, Ernest, if I can add on to that, I think Johann touched on it earlier. So the way we structure it is that you definitely got to have 2 resident directors in Mauritius, so that confirms that your board decisions are being made out of Mauritius. And if you comply with the substance requirements as required by the Financial Services Act, what it says is that you need a person running the business and carrying out the income generating activity. So if you comply with those two requirements, then it's kind of confirms that your place of effective management is in any event in Mauritius. So I think it's critical to comply with those two requirements.
Yeah, and also I think like you were saying, Ernest, the permanent establishment, you could possibly trigger that in South Africa for the Mauritian business. So let's say you as a director or one of the shareholders do the business development for that company in Mauritius, but you live and do all of your work from South Africa. That could trigger a permanent establishment in South Africa. So that's the thing that we always say to our clients, is to be careful. Rather get that person to do business development and make the calls and emails and everything out of Mauritius to ensure that it can be justified and you're properly earning that income from Mauritius that can be taxed there, and not to trigger that same effect in South Africa.
Good, thank you. I think that's the end of the questions there.
Yeah.
Specifically to Ernst and the loop structures. So Johann, yeah, I think if we can just look at Mauritius now, I know all South Africans love Mauritius as a holiday destination. They love the island life. But maybe you can just unpack a little bit more about Mauritius as a country, as an economy, and basically the offshore industry. How's it structured? How's it regulated? Just to give people comfort if they're considering moving their structures to Mauritius.
Yeah, no, thank you, Kerlsey. Yeah, I think what I like about Mauritius, obviously, one of the big benefits is that it's close proximity to South Africa. So from a South African business person needing to be close to his business, it makes a lot of sense because it's only a 4-hour flight compared to some of the other jurisdictions that could take a longer time to get there and attend the board meetings where you strategically make the decisions for the companies going forward. And I think Mauritius, over the last couple of years, they've grown tremendously as an offshore jurisdiction, maturing into the likes of, or becoming at least competitive and with other jurisdictions that have been established for a lot longer. And I think still looking from any money or business and investments coming into Africa, Mauritius is still favored in that sense. So yeah, I think in terms of the country as a whole, some of the things that's definitely part of why you want to consider Mauritius are the political stability. So I think over the last couple of years, it has been seen as a very stable political country. It's got a modern, flexible framework for facilitating international mergers, acquisitions, and cross-border investment activities. It's got an extensive tax treaty network that's continuing to grow. As I said, its regulation is on par with some of the best international finance centers. Its workforce is very skilled and it's increasing, and there's a lot of interest in that space in Mauritius. If you take, for instance, where Mauritius was 30, 40 years ago, heavily dependent on agricultural, textiles, and tourism. In the last couple of years, the financial services sector has contributed enormously in terms of growth for the country, and it's on par almost with the tourism sector in terms of GDP contribution. So yeah, there's a lot of positive things. Yes, it still has teething problems. Yes, it's still going through a lot of changes. What I also like about it is when these substance requirements and the changes came about, and there's been a lot more pressure by the tax authorities around the world, Mauritius was very proactive in stepping up and making the changes, like we've seen with the structures that they had, where previously you did have the global GBC2 company, which wasn't tax resident, which they now have dropped. And there was a grandfathering period, which is ending now the 30th of June, for certain structures or legacy structures that were in place, and for them to move on to the new structure. So I think they're doing all the right, making all the right decisions. in terms of to facilitate the financial services sector as a growth contributor to the economy going forward. In terms of how it's regulated, you've got, the way I see it is basically you've got two economies running at the same time. You've got a local economy where you've got your local citizens trading with each other and internationally. And then you've got your offshore economy where you've got foreigners setting up companies and trading through Mauritius, which is then regulated by the Financial Services Commission in Mauritius. And then they appoint management companies like ourselves to be there, to assist them in looking after the offshore jurisdiction in terms of compliance, money laundering, and statutory requirements for these companies. So yeah, it definitely is growing. I think I saw some stats that the financial services sector over the last couple of years have grown at least by 5.5%, whereas something like agriculture and manufacturing has stagnated really and even decreased over the last couple of years. So I see Mauritius growing and going in the direction that Singapore has gone. Obviously, still a long way to go, but definitely aligning themselves to have a very good offshore financial services sector over the next couple of years.
Thanks, Johann. Yeah, and I think the last stats I looked at from the FSC, there was something like 22,000 offshore companies, structures registered in Mauritius, so that's quite significant. Then just to point out that the banking system in Mauritius is first class. I mean, you've got the Mauritius Commercial Bank, you've got Offshore, the online banking is first class. You've got the presence of certain South African banks, ABSA, Standard Bank, and Investec. So from a banking point of view, it is, I mean, both Johann, both you and I have worked there, lived there, managed bank accounts on behalf of clients, and it really equals the banking system across the world. So that's also a very strong point. So Johann, just moving on, yeah, I mean, if we can just touch on kind of, you know, BTG Mauritius, what kind of structures do we offer? So if clients are looking to move their assets or capital offshore, just a quick discussion on what kind of structures we commonly use.
Yeah, sure. Okay, so typically we offer the normal structures. We can offer you a trust that's managed and run from Mauritius. We also have one vehicle that's also very interesting to use currently is a private foundation, which gives you a little bit more options on the structure. And it's basically a hybrid vehicle between a company and a trust. And it's not just used for charitable functions. We've got, as we said, the Global Business License Company, which is the company incorporated and tax resident in Mauritius. And depending on what services or products you trade in or provide, it either has a tax rate of 15% for services or 3% for trading. And then we also have an authorized company. Again, like we mentioned earlier, authorized company is registered and set up in Mauritius. You've got a Mauritius bank account, but it's not tax resident in Mauritius. So you can effectively run that company from South Africa, but then potentially need to take into consideration that you possibly would need to pay taxes in South Africa on the profits of that company. And then we've got other structures as well, like protected cell companies and those kind of vehicles that's kind of just built on top of the global business company. So those are the typical structures we do offer in Mauritius for some of our higher net worth individuals that are not as comfortable with Mauritius, but rather want to go to a more established jurisdiction. We do offer trusts in Switzerland that's administered from Switzerland, but that uses Jersey law. And then you've got access to the banking system in Switzerland if you need that. So those are our typical structures that we do offer our clients, and obviously work closely with tax guys to make sure that the structure is set up correctly and to the best benefit of the client.
And thanks, yeah. And then just to explain the team back in BTG Mauritius, there's 3 executive directors. It's myself, I'm a chartered accountant with an H-strip tax law. We have Boris Pellegrin, who's the MD. He's a South African attorney. He's been there I think 12 or 13 years. And then we have Bavita Yankee Persand, who's a local Mauritian resident, and she's a qualified company secretary, and she's busy studying her international tax law at the moment. So I think the strength of BTG as a management company is that we understand the Mauritian landscape, the requirements, but we also understand the impact from the South African side, being South African chartered accountants and South African attorneys. So a lot of value add there to assisting clients in planning their move from South Africa to Mauritius. I think, yeah, I don't know. I haven't seen any further questions coming through. I don't know if I can open it to the floor. Has anyone got any questions on Mauritius specifically as a jurisdiction, or any concerns? Or okay, thank you. No more questions. Just like to thank you all, Johann and Ernest, for your time and your preparation, and for all the people that have attended this webinar. Please feel free to contact any one of the three of us should you have any further questions, should you wish to meet further to discuss your needs. So, hi, Alan, I can see you on the line.
Yeah, thanks, Kerlsey. It is very interesting for me. I'm very much a novice when it comes to this area of law and practice, but obviously I act for a lot of high net worth individuals. Just nice to learn about what's out there, and I think there's no doubt that we'll be in touch with you in the future when the need arises. Keep me in the loop. If you do this again, it's very informative and very interesting. So thank you.
Yeah, thanks, Alan. I mean, I'll probably within the next week or two, I'll come through to your office, sit with yourself and your partner, and we can discuss it in more detail as to what the opportunities are, you know?
That sounds excellent. We've got good coffee and we'll be good company. Thank you.
Thanks,
yeah,
Alan.
just on that subject, if you do want, we've had a couple of these webinars already, which we've recorded and put on our BTG Consulting YouTube page. So if you want to, we'll circulate the link and you can go have a look. We also have a couple of the structures that we've made some high-level videos about. So you can always have a look at that.
Thanks, Johann. That's awesome. Thank you.
Great. Thanks, everyone. Thanks for attending. I can now call this webinar to a close, and enjoy the rest of your day, everybody. Thank you very much.
Fantastic.
Thank you very much, guys, from Jimmy.
Okay. Bye-bye.
Cheers, Ernest.
Thanks, everyone. Bye.